Welcome. My name is James Barber. I'm your Oregon Cash Flow Pro. We're going to do a quick update on our poor man covered calls and our covered put. If you've been following along on this, welcome back. And if this is new to you, stick around. I'll do a quick recap to bring you up to speed. But you should definitely check out some of my earlier videos on these particular trades because we're going into quite a bit of detail. So if you're following along on this, let me know in the comment section. Let me know if there's something that you've learned, if there's something that you were unaware of that I was able to bring to your attention, or if you still have questions yet to be answered. My goal is that I'm going to provide you with enough value here that if you're interested in doing something like this helps you along the way. It may not be the most comprehensive guide because I'm not trying to do that all in one video. That might be like an hour-long plus video if we were to do that. Instead, where I see the value in this is in following along, and I'm going to be sharing my thoughts with you as to what we're doing each week. And this week is kind of an important one. So be sure to stick around because we've got a lot of things to talk about. But if you do find value from this, hit that like button for me, would you? I really appreciate it, and it lets YouTube know that people are getting value from this and they should share it with other people. And that's our goal here. I'm not trying to sell a course or anything. We're just trying to get exposure and help other people do better. Okay, quick recap on Nvidia. We purchased the 85 strike, expiring in 2 years. We did it after the big dip. Nvidia dropped 17% in 1 day. We picked this up after that when it was down here. It shot back up. Well, we immediately sold a call, picked up some premium, and then it shot back up, and then it came back down. So what we're tracking here is how much are we able to get each week if we sell covered calls against this long call option. Now, our ultimate goal is hopefully we're going to be hanging on to this, making a bunch of money selling covered calls for a couple of years. And this is also going to be worth way more than $85 per share when we get to January 25th, 2027. That's best case scenario. Worst case scenario, wherever the stock is at least we recovered the whole cost of that. And we really don't want to go 2 years just to break even. So we're going to do everything we can to avoid that happening. And certainly we don't want to lose money. So if we're able to sell for around $100 a week, that's an annualized 100% return. We can recoup this in a year and then start making money, regardless of where the share price is. So that's what basically we're going to try to do. So we sold our first one, bought it back for almost nothing, sold the next one. Now, after that happened, Nvidia took a big drop over the weekend. I got smart. I thought, you know what? I'm going to buy that back first thing in the morning. We basically made $55 overnight. And I figured it would bounce back up and that we would be able to sell again. And it didn't really bounce back up. It kind of held steady in that area for a bit. You can see ultimately I ended up going lower on the strike price. I went down to a 127. We were at the 132 because my expectation was that Nvidia was going to bust right through 130 and we might be on our way back up. Or I shouldn't say expectation. I should say that was the hope. And it was a definite possibility. But instead, it came back down and we need to protect our upside. We need to give us enough upside because we're selling this as a synthetic share and our break even is around the 139 strike. But if Nvidia were to keep going down, selling the covered calls at a lower strike price is our hedge. I need to bring in that money. If I had continued to sell way outside, if I had stayed up in the 132 range, I would have gotten maybe half of that. Now, it turns out Nvidia did bounce back right at the end of the week. We didn't know that was going to happen, though. If I was really confident in it, I probably would have just sat it out and waited as opposed to getting back in. But I needed to make sure to protect my downside while also leaving enough room that I could roll it up for the next week. And that ends up being what we did. So the day before expiration, Nvidia shot back up. When it got right near the 127, we rolled it to the next week and we rolled it up 4 strike prices. So we had to buy this back. We sold it for $93, which would have been an annualized return of 89% had it expired worthless, if I didn't have to pay any money to buy it back. But it wasn't worthless as of the day before the expiration. In fact, I had to pay $165 to buy it back. So in this situation right here, if that was all I did, we would have had a loss on this particular trade. It would have been a loss of $62. Well, rather than take the loss, we rolled it. This is the first time I've had to roll this one. When we roll it, it's a single transaction. We're going to buy back the one that we had sold, and we're going to sell another one at a later date in the future for more money. That way we can collect a credit. Now, when I bought that back, I brought in, when you see the numbers in yellow here, these are tentative. When it's in green, that means we realized either a loss or a gain. Okay, so far these ones are realized gains, and that's the annualized percent. Well, if I had just bought this back, it would have represented an annualized loss. If I did that every week, an annualized loss of 69%. So obviously that would not be very attractive, but this is temporary. We sold this one. When we account for all three of these, it's a 62% annualized profit. That's still good. We went from 89 to 62 by rolling it out, and we rolled it up 4 strike prices. That's the equivalent of $400. So if the stock goes up and stays up above the 131, that's a difference of $400 if we get assigned. Those are real money. So it was really important to roll that up. There's another reason why we roll it up. We roll it up because we don't want the stock to outrun us. What I mean by that, let's hop over to the chart and I will explain more. Okay, so this is Nvidia's chart. Let's zoom in a little bit. I've got these support lines and resistance lines drawn in, and I've had them in for a little bit, and we can see the support line that I had, where it was prior support here, but also resistance, was right at 130. In fact, if we go to the 1 minute chart, it was at 130 and 18 cents. That's where I drew it in. We didn't dial it in exactly. I drew it in based on, I think, the weekly chart. So we got really close, and Nvidia popped up right to 130 before it rejected. This was what I was concerned with. I was concerned, let's go back to the daily chart. I was concerned that Nvidia would come back up to this resistance line and blow right through it. And that might happen this next week. There's a good possibility that could happen this next week. Now, in the aftermarket, it's down a bit. We go back to this chart and we take a look. It's down at 128 in the aftermarket. Here's where it ended on Friday, and it came down. Now, all of these overnight moves, not really a big deal. We'll see where it's at when the market opens on Monday. But back to the daily chart. My main concern earlier in the week, we were in here. It's possible we had kind of maybe a small trend line here that we could have bounced off of and just gone down. So Nvidia came back a little bit, but it could have easily turned around and went down. That's why we sold the 127. I wanted to make sure that we captured some premium this week. Now we sold the 127. Oh yeah, we sold it here. We sold it here. So I had no expectation that it was going to shoot up like this every day of the week. This was my protection. We could have ridden this lower Bollinger Band. That's what this green line is. This is the low end of the Bollinger Band. We could have ridden that down, 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 down. Sometimes you just don't know what the stock's going to do. So when I sold the call that week, we sold the 127, which brought us way up here, which is right close to the top here, but it was a little bit more premium than if had we been up here at 130. It was enough that it seemed worthwhile. That's why we chose that strike price. Now, when I rolled it, I intentionally rolled it above this line here. If it rejects from here, we're above it. It expires worthless this next week, and we could potentially get some good premium again going on this thing. If it goes through it and it shoots up, we're gonna end up rolling it again. Now remember, our break even is somewhere around 139. I mean, we're already positive by a lot. The value of that long right now is up like $500 or $600. So we could get out, we could totally exit our position, and we will have made some good money on this trade already. Over 10%. And we've been in it for just over 10 days. Not too bad for what we expect to be a slow trade. Now, we could turn this into way more than 10% if everything goes correctly. The biggest concern is that we get a massive sell-off, and then we lose a bunch of money on that long call, and we have to chase it down by lowering the covered calls that we're selling, and then suddenly it turns around and shoots through it. That's the biggest risk. If it turns around and shoots through it, and we can't catch up, we're going to spend the next 2 years chasing it. And that could be really tough, especially if it shoots up fast. If it goes way past it, it's really hard to roll out and up. It can be done, but it's a much, much slower process. We'll make it work though. But I would rather be doing that up here. I would rather be doing that up around 139, not down here around 112, or certainly not lower than that. So hopefully that makes sense to you guys. Like I said, if there's any confusion, put it in the comment section. Let me know. We'll try to clarify. But we're sitting on the 131, and we're going to find out pretty quickly this next week which direction Nvidia is probably going to be moving. Could go either way. And I think we're well positioned for a move either way. We're going to hop over to GME next. So let's take a look at the chart first. Okay, so this is GME. Over the weekend, we had a big drop. The whole market kind of dropped. And I was expecting it to bounce back as well. And so we bought out of our covered position. Only I never got a good entry back into it. So we are holding without a covered call at the moment, hoping to see some type of a bounce from down here. Now, I don't have a support line drawn in. These were old. These were old support lines. I don't have a support line down here until 19, almost 20 bucks. We could potentially see some support. So where it's at right now is the top of this candle over here. We could come down to here, 23.19. That's right near the low Bollinger Band. So it's possible that it comes back down to there before it goes back up. It's possible it just keeps going down. We don't know what it's going to do. There's been strong support around the $20 range, which is what we bought. Our long call is the $20 strike on GME. We really are hoping that it doesn't go down that far, but we'll deal with it if we have to. So hopefully it turns back up and we can sell a covered call at some point during this next week and get some of that premium. I'm going to remind you here in a second by showing you, but our long call on GME, we only have 1 year till expiration. So we don't have as much time with this one. This one is not a position that I expect to be in for the entire year. Well, if we end up shooting back up around the $30 price, we're probably going to exit the position. We'll see where our covered calls are at, but we will probably exit the position, get some premium, and focus on some other trades. Okay, back to our table. This is GME. This is the move that we made. It was a pretty decent drop. I mean, this was over the weekend. We went from a potential 154% annualized return down to 56 realized because we bought it back just below half price. We made a little over 50% of the profit in 1 day. I usually will take that. If we get a big move in a day like that, oftentimes you'll see something bump back up. You can sell it again if you buy back into it before the end of the week. It just didn't happen this week. Not a big deal, but we did miss out on that extra 16 bucks of premium. So our overall position, we're at $1,093 that we would need to make selling our original call in order to break even. Currently, I think the value is somewhere in the high 900s. So we're down at the moment. Gonna wait for that to come back. Hopefully it will. We still have lots and lots of time. All right, next ticker, AI. This one, we ended up buying it back the day before expiration for $4. Anytime I can pick it back up for less than $5, I will probably do so and look for another opportunity to sell it if the stock pops up. Sometimes moves happen overnight that can easily make that a worthwhile move. Now, it didn't happen in this case. We bought it back and we didn't enter our next trade until the next day. And ultimately, we kind of waited around a bit that next day. Didn't really find the entry point we were looking for, but it did come back. We did at some point get a decent sell here. Anyway, we got a really good return. We sold the 36 strike for $37, which is an projected annual profit of 123% if we could do that every week. That was a pretty good premium. I like where this one is at. Now, the stock could go either way. I don't know if it's going to pop up. I don't know if it's going to continue to sell off. But in the AI space, it kind of could go either way. Could pop at any day. And so we need to make sure our strike price is high enough that we can take advantage of it. Right now, our long call is actually worth more than we originally paid for it, and we've collected a bunch of premium. So we're in a really good position on this trade overall as of today. And finally, this is Bros. We're still waiting. The expiration date, this is a monthly expiration date. This one was a put that we had bought to open, and we've been selling puts against that. So similar to the poor man's covered call, but this is more like the poor man's covered put. The expiration isn't until the 21st, and we'll see what happens there. We do have earnings coming up, and so there is a good possibility that the stock price comes down after earnings. As of today, the stock has just climbed, but I think it's because of earnings. I think it's up around $67 as of today. So definitely not the direction that we wanted it to go when we entered the position, and we're down overall on the position, but we're going to start making some income, and we have 2 years till expiration. We're going to start making some income to bring our position more in line with where we would like it to be for profitability purposes, and it also buys us time for the stock to come back down if it's going to come back down. We don't know if it will, but that's ultimately what the play is on this one. That's all I've got for you this week. Again, if you find value, please hit that like button. Subscribe to the channel if you want to follow along with these trades. We're going to be talking about this every single week, hopefully providing you with some value, things to think about if you find yourself in similar situations that we are. Some of these things, they're all theoretical. You can look at the numbers and see kind of what they do, but you don't know until you get into these trades how it's going to feel when you've got to decide what strike price to sell. I don't like to just sell the same delta strike price every week because we got to take into account, where are those resistance levels? Where are those support levels? Does this stock support rolling out and up if it suddenly blows through one of my levels? If you have a stock like this AI stock, this one is a hard one to roll up and out if we have to roll it, and it had shot through the stock price. There is not much extrinsic value on these things when they're in the money. This one runs out of it very quick. This is a stock I'm going to have a fairly short leash on. We're already profitable on the long call, and we're profitable from the calls that we've sold. So I could close this position at any time and take our profits. If it shoots up above the strike price that we're at, if it goes up pretty quick, I may just close the entire position because we're going to have made a bunch more money on that, even though we will ultimately lose money on the covered call. So we'll be watching for that. We'll be watching it closely. And when I make a move, I will tell you guys about it. If you have an experience with these, I would like to hear about that too. So please share that in the comment section, and we'll be back soon. The next 20 seconds determine your future. Subscribe, meet with me, or continue educating yourself with these videos right over here. I appreciate you. Now go maximize your cash flow.